Hey everyone, welcome back to the channel. This is your weekly review for July 13th through 17th, our quick reminder before we start. This is educational, it's how I read the market with the Conflux method, not a signal service and not financial advice. Trading futures and options carries a real risk, so take this as a walkthrough of my thinking. Let's get into it. First, a quick look back at last week, then the week ahead. Let's start with a look back at last week. We had a few good trades. The yen, for example, continued its move and worked both long zones nicely. A short was caught on WTI, which was closed partly in profit and partly at break even to avoid any weekend shakeouts. On gold, the limit driver zone got broken, but the zone worked well from the other side and the losses were covered. All in all, not the most active week, but still one closed with a good profit. Now let's move to next week. First off, I don't understand why investing is ignoring Warsh's testimony scheduled for July 14th at 10 o'clock. For me, his testimony is the second most important event of the week after the US CPI, and their importance is almost identical because he speaks right after the inflation data is released. So on Tuesday, it won't just be the CPI shaking the market, but Warsh's speech too. There will be sharp moves after the inflation print, and more on his words. Which means the move that starts on Tuesday is already set to run through August 7th. Inflation should rise one way or another, and that number will be in the data. That's the basis for how deep the move on the assets will be. If they step to 4.5% or more, then a September rate hike gets priced in at 100%, and on that the dollar goes up. If they paint 4% or less, the dollar falls and the other assets go up against it. The moves should be good ones. Let's start with the euro. On the euro options, one participant and one portfolio have shown up. Let's see how they open on Monday, but in the Asia session, one option is to try sells off the zone where P/F, Renko, key and limit driver all lined up with a move toward the zones below, and from there, you can already look at buys. Here, a strangle is open as an expectation into August 7th, and below it a hedge and an expectation of a strangle and a straddle. Given how the bulls have been fighting the bears at one point for 2 weeks now, and how tightly the bears are holding it back from rising, the spring's going to uncoil very fast. Japanese yen. I'm watching these strangles with puts in the weekly zone, so that the yen gets poured down there, and that's exactly where the Bank of Japan and the US Treasury will step in together with interventions and carry everyone up to these zones. If you map it onto spot, it's 165 and 167 again. And the main thing is that on Monday, they don't spill it down to 158 to 159, but hold it until the CPI. And then on Warsh, or on Wednesday morning after the clearing, you can carry the bears out. So for now, we keep watching the plan play out. On the pound, they couldn't do anything I was expecting, and buys off the nearest zones are still in question. Let's see how they open on Monday. The weekly zone above sat cleanly on top of the monthly zone, but if the euro is traded down, then the pound won't be able to go up on its own. A drop to 1.2915 is too big, because the euro has strong support at 1.1185 on spot, so the run-up for the decline is also too big, and the pound looks a bit stronger than the euro. So they could well drop to 1.3250 and then go into a correction. In short, there's no clear picture on the move. Options didn't highlight anything worthwhile here either. Synthetic was going in, but there was nothing large. NQ. I'll still think about buying back, since the CPI is on Tuesday, though it's exactly on that they could spill it down to 29,530. But a beautiful butterfly went in, and the weekly zone lined up there too, so you can calmly short there. As a target, it looks great too. On the SP 500, it's a similar situation, and here too, they put in a calendar butterfly on the 7,850 strike, so on a push there, I'll short. On buys, I'll also think it over tomorrow after the open. XAU. On gold, they're now trying to buy it back well, and we won't argue with that. Though, of course, I'd like to buy it back to lower. At the open, I'll look at what kind of exit we get. If they gap to 4,230, then I'll look at sells there, and then a buyback toward 4,300. Also, don't forget that an active rollover to the December contract has begun. That zone is interesting as a target to get there and take profit with counter sells. Schematically, at the open, this is the move I'll be interested in through the end of the week. But the main thing is how they open tomorrow. If they go for a new low, I won't be buying back. Also, those options showed up in the market again. I'll butterfly on the October contract, with the far wing being the most interesting one to work on it. XAG, silver. No ideas for now. Options didn't highlight anything. Need to watch the open. The move up happened off the percentage zone, but a crooked one. Gold moved more impulsively, whereas here, there's no liquidity at all. So, if from the open, they go up with a break of 62, then on the pullback, I'll look at buys off 60.21. And off the upper ones, I'll short. Especially off the weekly zone, a lot has converged at that point. On these zones, I'll also try sells, with a pullback to 60.21 as the reference. And on a spill from the open, I'll get into the market not before 52.80 or 52. WTI. I closed oil with a break-even fixing, but they still turned it further down. Iran is still playing games with the US. For now, oil is falling, but the reserves will soon show everyone their bottom, and they'll start refilling them urgently. And without the opening of Hormuz on refilling the reserves, the price of oil will be carried up cheerfully. For me right now, the long-running range for a couple of months is 59 to 82.50. The price could also hang in the 69 to 74 balance until the next Iran events, without starting a move down or up to the weekly zones. And that probability is very high. The one hope is the US CPI, but oil doesn't depend much on inflation. Rather, inflation depends on oil, and very strongly. That's roughly how I'd like to work it, but what the market gives is the question. That's the plan for the week. Remember, these are zones and scenarios I'm watching. The market decides, not me. So let price come to your levels and let the confirmations line up before you act. If this breakdown was useful, subscribe and turn on notifications so you don't miss the next weekly review. And drop a comment with the instrument you want me to cover. And one more time, so we're clear. None of this is financial advice. I don't sell signals and I don't promise profits. This is educational content about the Conflux method, and everything here is my own view of the market. Trading futures and options involves a substantial risk of loss. So never risk money you can't afford to lose, and always do your own analysis. Take care, manage your risk, and I'll see you in the next one.